Okay guys, so this video is gonna have two intros because there was some news that just broke not too long ago that I feel is actually pretty interesting and important. So I want to get into it real quick. It's coming from Decrypt, and it's a story about Coinbase and insider trading. So the story here reads: DOJ and the SEC charged former Coinbase product manager with insider trading. Former Coinbase product manager Ihsan Wahi and two others made more than $1 million trading on inside information, authorities allege. A former Coinbase product manager and two others together ran a year-long insider trading scheme that generated more than $1.1 million in profits, U.S. federal authorities today allege. Ihsan Wahi, while an employee at the San Francisco-based crypto exchange, allegedly provided information regarding upcoming token listings on Coinbase to his brother Nick Lee Wahi and his friend Samir Ramani. Authorities claim Wahi's brother and Ramani then used this knowledge to buy the tokens before Coinbase announced their listings and then sell them quickly for profit. The Department of Justice announced today that all three of these individuals have been charged with wire fraud conspiracy and wire fraud in connection with a scheme to commit insider trading in cryptocurrency assets by using confidential Coinbase information. The SEC also announced today that it filed civil charges against the trio over the alleged scheme. The FBI has arrested the Wahi brothers while Ramani remains at large, according to the DOJ's press release. So this is very interesting. They claim that for a year they was doing this same scheme. They also claim that they bought at least 25 cryptos in that time span. Again, I guess it's yet to be seen how much of this is true or not, but it speaks to several much bigger points. Point number one, these whales absolutely manipulate the market. I've seen people say things like, oh, the crypto market's not manipulated. What are you talking about? If that whole Wall Street bets didn't show you guys anything yet, you're not paying attention at all. That should have clearly showed you that these companies like Citadel and like these guys who used to be managers at Coinbase and their family members, when they take valuable information and they use it to their advantage to manipulate the market in their favor. Because I don't care what you say, this is manipulating the market in their favor. When you're getting notice of a coin that's going to be listed and you know it's going to pump, and you buy almost $500,000 of that coin and then sell it 24 hours later for a 42% gain, that is you clearly manipulating the market. So at the end of the day, a lot of these exchanges are shady. Do not trust anything Coinbase says, and do not listen to anybody who tries to tell you that crypto isn't manipulated by the very people within government, within these exchanges, within all these higher up places, because they are all connected. Do not believe anybody that tries to tell you that they're not sticking their hand in the pot and actually making out like bandits. See, the SEC will never in any of these court cases want to disclose if their employees buy or sell or buy shorts of any of these crypto assets that they sue. They'll never want to disclose that, because I can almost guarantee you this same type of news will come out about the SEC. I'm willing to bet money that before the SEC officially filed that lawsuit, many employees there, probably including Jay Clayton himself, bought a bunch of shorts on XRP. But then you have people who will try to tell you that crypto is not manipulated, even though every other market around the world that's valuable is manipulated. And crypto is more valuable, more volatile, newer, and picks up momentum faster than all those other markets. and they manipulate all of those markets, like real estate, like the food industry, like anything, precious metals, whatever. But people want you to believe crypto isn't manipulated. Either way, man, let's get into the actual start of this video. Okay, guys, so I'm back. Rain, sleet, or snow, we have some more crypto and money news to get into. First story I want to get into here, it's actually a real estate story, but I still feel like a lot of people in crypto would want to hear about this. It's from CNBC. Well, really, it's from Diana Olick. And it reads, mortgage demand drops to a 22-year low as higher interest rates and inflation crush home buyers. Surging inflation and interest rates are hammering American consumers and weighing on the housing market. Mortgage demand fell last week, hitting the lowest point since 2000. Buyers have lost considerable purchasing power as rates have almost doubled since earlier this year. So what we're seeing, I feel like we should be seeing a decline in the housing market overall. But something that's interesting that I want to get into here also shows how, to a degree, so much of these markets we're seeing are highly manipulated and completely irrational. And it's the next story I want to get into here, and it reads, June home sales fall 5.4% from May as prices set another record. And they mean record as in record high. They're talking about another record high. So further down it says sales of previously owned homes in June fell 5.4% from May, according to a monthly report from the National Association of Realtors. This is the slowest sales pace since the same month in 2020, when sales dropped very briefly at the start of the COVID pandemic. The median price of an existing home sold in June set yet another record at $416,000, an increase of 13.4% year over year. How does that make sense? How in the world does that make sense? That doesn't make the slightest bit of sense. Homes are becoming harder to get. The demand is decreasing significantly because with the rising interest rates and with people having to deal with inflation, along with other debt that people might be dealing with, along with incoming food shortage that nobody wants to talk about. How in the world are houses, are the average price for houses being sold still at an all-time high? Like I can't wrap my head around this. I can't imagine they can milk this any longer than they already have. They've already been milking this artificial market for well over a decade. Sooner or later it's gonna fall, whether they want to admit that or not. Next story I want to get into here is a post from Brad Kimes. He's quoting the digital asset investor when the digital asset investor said, "Just bought more XRP on Uphold because they are the only place I can get it. And I believe there could be a day very soon when retail can no longer get it at all." Brad Kimes quoted that and said, "Ding, ding, ding, we have a winner. I just did the same thing too. I believe XRP retail buyers may not be able to get it after the SEC versus Ripple case is over." Now that's only partially true. You can get XRP on several exchanges still. Some of these guys, and I like these guys. I like their content, but some of these content creators for XRP, they keep spreading this idea that there's nowhere else except Uphold where you could get XRP, and that's not true. You could get it on KuCoin. You could get it on Ascendex. You could get it on what's that other one? Bittrex. So there's still several major exchanges that, at least for the time being, have some sort of liquidity. Again, that could change at any moment because all these exchanges are shady. But Yeah, you could go to KuCoin and get XRP pretty easily. Same thing with Ascendex, same thing with Bittrex. And when you get it on these platforms, you could withdraw it the same day typically. Like, unless I don't know, unless you buy it with like a credit card or something, or a debit card. But either way, you can still access it. I feel like a lot of people that they're focusing more so on spreading the idea of how scarce XRP is about to be, because I do believe it is going to become more scarce. That's why I said I partially disagree, but I partially agree with them. It will reach a point where it definitely will become more scarce, but for the time being, there's still places that people in America can go online to buy it. So and not just Uphold, because again, personally, I don't like Uphold. I bought XRP on Uphold one time, and they told me I had to wait 60 days. Now look at what just happened to Celsius. Look at what happened to Voyager, what happened to BlockFi. Look at what happened to all these platforms. Do you think I'm comfortable with any exchange that says I gotta keep my coin locked on their platform for a minimum of 2 months? Like I'm personally, I'm not comfortable with that at all. So like, Uphold just not really the place for me. The only thing I got on Uphold technically is like, I think basic attention token, and I don't even think that's on Uphold anymore, because the only reason it was technically there was because I used the Brave browser and my basic attention token was automatically being stored there. So but now I think the Brave browser like migrated to their own wallet, if I'm not mistaken. So most likely I don't even have it on there anymore either. So yeah, I mean, yeah, it is what it is. Next thing I want to get into here is a post, again, another post from Brad Kimes. Shout out to Brad Kimes. And the post reads, the one thing I've always said was missing from the crypto market was the same thing that is the current backbone of the monetary system. Ladies and gentlemen, I give you the treasuries market, aka the bond market. And he plays a clip here that I'm gonna play in a second of somebody, I forgot the guy's name, who I'm assuming had like a Freudian slip where he accidentally admitted that the next thing to get tokenized in America is the bond market.
The next big asset to get tokenized will be the U.S. Treasury market.
Really?
Well, how about sorry, I think that
the next big. Listen to what he says.
The next big asset to get tokenized will be the U.S. Treasury market.
So yeah, I thought that was pretty interesting, and I do believe that was a Freudian slip. Like, he just, I just think he just like let one slip. But most people probably aren't gonna care too much or pay it much attention. The next story that I want to get into here is a post from the digital asset investor. He posted a picture of several leaders, well, so-called leaders, at the G7 summit, and he put an X on all the ones that are no longer in their positions of power, which I thought was pretty interesting. That when you look at it, out of this handful of people, like the majority of them are no longer in their position. They stepped down or whatever else happened. So a lot of people, they'll laugh at things like that and call it crazy or conspiracy. But again, it's like they always say, the difference between a conspiracy theory and a fact is about 12 months. A lot of people, they like, but once the truth comes out, once it's admitted to be the truth, like the Hunter Biden laptop, nobody wants to turn back around and admit they were wrong. But anyway, the next post here is a post. It's a post from I'm sorry, I'm looking at the screenshot. Okay, the person's name is Wall Street Silver. They're posting a post letting people know that right now the banks in China are being protected by literally tanks. Like, literal tanks are protecting these banks. It reads, tanks are being put on the streets in China to protect the banks. This is because of the Hinman branch of the Bank of China declaring that people's savings in their branch are now investment products and can't be withdrawn. In other words, they just screwed over a bunch of their population because they don't have the money and they want yours. Which again, very, very evil. But a lot of these banks could do that at any point. The same thing could happen in America. A lot of people in America, they have this arrogance where they think that things can collapse quickly. And that's part of the reason why in America so many people make fun of doomsday preppers, because they have this idea in their head that they live in this perfect and protected society where they can always have their way. No, things go left very, very fast. And the people that are in charge of many of these countries, or all of these countries, they don't care about people. The people running China don't care about Chinese people. Get into here. Next story I want to get into here is, this is actually a clip from the digital assets investors video that I want to play. I think it's very powerful, where he's talking about this post right here from Cowboy Crypto, where it says, in October 2021, Brad Sherman called witnesses from Wall Street to testify at a hearing of China's market abuses, which included Alibaba. He called Wall Street witnesses to testify, but they all backed out. Why not call Bill Hinman? He was standing right next to Jack. And of course, this is a picture of Bill Hinman, who is the guy all the way to the right. He's the white guy in the corner of this picture, on the right side. And Jack is the guy directly in the middle, obviously. So I want to play this clip of the digital asset investor talking about this and calling him out. I'm just going to play this really quickly.
No interest in finding out about what went on there. No interest in a guy that was literally on the floor with these guys of Alibaba. He wasn't only on the floor, he was staring at them like it was his life's accomplishment. Look at the look on Bill Hinman's face in this short clip. Look right there. Look at his face. He's standing there with his arms closed like, look what I did. Look what I did. He has a look on his face like he's the alpha there, and look, I did all of this. And you're welcome.
Next story I want to get into here is a post from SEQ, and it reads, the SEC is looking to set a dangerous precedent to classify all cryptocurrencies as securities. Video below from SEC versus Library summary yesterday. With the recent doubling of their size of the crypto assets enforcement units, expect to see a flurry of cases if they are successful. And it's a clip here of John Deaton, again summarizing in his video the situation as he sees it.
Said that this case, the library case, and it also applies to Ripple and the XRP case, is a unique case that has not been fully addressed by the appellate courts. He said it's what we call a mixed use case, right? Some people own the token and acquired it for consumption, and some people acquired it for investment. And how do you handle that? And the judge ended up near the end of the hearing saying to the SEC attorney, well, what if we were to look at every library transaction and we were to come up and find out that 75% of the people acquired it for use and utility, right? To utilize the platform, and 25% investment. How does that make it a security or not security? The SEC's attorney basically said something very dangerous. He said utility doesn't matter. And the SEC attorney conceded that some people acquire LBC for consumption and to utilize the blockchain.
That I want to get into here is a post from. It's a post again, another clip that I want to post from the digital asset investor, where he's calling out somebody who, rightfully so, the guy calls himself 2-bit idiot in his name on social media. He's calling this person out because a lot of people like this 2-bit idiot have had a change of tune about Ripple and XRP in recent months. Because again, many of these people, they rooted for our downfall just a short while ago, but now they're realizing, oh my gosh, they're not going down without a fight, and they're actually winning. And now they're drastically changing their tune. At first, this guy was, when the lawsuit was first filed by Jay Clayton, people like him were making jokes But now, because it almost, in my opinion, it almost looks like a win is imminent. Now, he's talking about he's rooting for Ripple. When you should have been, if you had any common sense, if you weren't a dummy, you should have been rooting for Ripple the whole time, because you would have had enough sense to understand that even if you're not a big fan of the project, that is still going to set a major precedent for the entire industry. So you should not want to see them suffer, when in the end your investments will suffer too. The projects you like will suffer too. So I'm gonna end this video with this clip from the digital asset investor.
He says, Selkus, Brad Garlinghouse, the SEC's out of control. This guy has been one big piece of garbage from day one. He's an arrogant smug. I mean, this guy's a bad dude. And the next guy I'm going to show you is too. But this is what he had to say when the case started. Okay, so I'm glad that none of us out here who have been working our butts off to prove what the SEC was up to, I'm glad that we didn't listen to this guy or have his, in my opinion, stupid opinion influence what we knew was going on, which was something not right. And so we dug anyway.